Welcome traders and welcome to all of my students in today's mentoring session. And as usual, we'll be starting the session with the weekly sectoral analysis with the top-down approach. And once this sectoral analysis is over, one by one, I'll be taking all of your questions regarding positional and swing trading setup. And as always, I'll be starting with Nifty, Bank Nifty, private banks, and so on. And then we'll go to the mid-cap index. So first, if you see Nifty, I think nothing much has changed. Nifty is still, Nifty spot in fact is still trading above that 161.80% Fibonacci extension. This is a good sign, and nothing much. You can see RSI is also gone flat in last couple of months, and this month is almost coming to an end. It's almost over actually. It's today's 30th, you can say. So you can see RSI is flat, which clearly means that in last 3 months, the closing was very similar to all the previous couple of months. So you can see market is flat. In weekly chart, we have some difference. What we can see is, even last week I had told that this negative divergence, which we can see right now, is a clear sign that the momentum is waning, that the upside momentum is getting weaker. As of now, my friends, there is no sign of a very large correction of something, but we need to be very cautious because what is happening is, I'll just share with you something. First thing is, if you see all these candles, they are very small. And if you see this particular formation, this is a sort of bullish harami. This is not exactly, bullish engulfing, I'm sorry. So this is not exactly bullish engulfing, but looks like one. Generally, bullish candle patterns at the, not at the bottom of a trend, but somewhere higher when negative divergences are forming, it's not a very good sign. So this is what we need to understand. And all of the other candles also, they're all small in nature, which means undecision in market is lurking very clearly. Now, if I go to the daily chart, today I think so market was looking pretty confident, and suddenly we saw a drop of more than 100 points, almost 100 to 116 points in Nifty futures. I think yes, a couple of days back I also share my Nifty short-term Nifty futures view. In that I clearly written that 15,850, and there was a resistance band basically. If market is not able to surpass it, then we could see some sort of selling coming up, and we saw that Nifty gave up all its gains today and closed in the red territory. And we can see over here, this is a very big hammer, and the reason for this hammer is very clear. This is this particular Fibonacci retracement. You can see this is coming at a very strong support for the daily chart, and this particular inverted hammer is due to the resistance band which I shared yesterday, a couple of days back, sorry. We also have a gap. So basically you can say Nifty is locked in a range. If you see the RSI also, it is pretty much going down. If the RSI goes down and then it goes up nicely, and then you start seeing all of the sectoral charts, all of the stock charts getting bullish, I think that will be a very good sign. But till that thing does not happen, we are locked in a range. One thing which I would like to say is 15,500 is a strong support, no doubt about that. If we close below that for a couple of days, there is a possibility just a very small correction of around 100 to 150 points. And in case if Nifty wants to go higher, then it will have to close at least this gap of you can say 15,925. Market will have to close above that, and not just close, because if market closes above it and next couple of days it starts coming down again, that choppy moment, there is no use. Once that close happens, market has to consistently trend in a particular direction. We need to understand that. All right. So do not understand. ये मत सोचना कि एक बार इसके ऊपर close हो गया, then all is done and we'll fly to 16,000, 16,500. No. Look at the price. Look at what the stocks are doing. Important stocks are doing. Look at all other sectoral indices are doing, and then take a judgment about the trend of the market. Okay. Bank Nifty. I'll just first go to the monthly time frame as always. In the monthly time frame, I think the charts are looking bullish, nothing bad in it. If you go to the weekly chart, I'll just remove this Fibonacci for a moment. It is once again facing resistance from this particular retracement, 78.6% retracement. Until and unless this is not surpassed, we'll not have a very big move in Bank Nifty. We need to understand that this is a very strong, important resistance, 36,136 and somewhere over here 36,400. And if I go to the daily chart, so first of all, the trend in the weekly chart is up. The trend in the daily chart, the monthly chart is also up. But the trend in the daily chart is down. It's not up. But the positive news is that this particular support is helping the Bank Nifty from falling sharply. You can see this is due to this particular 78.6% Fibonacci retracement, and there is also one retracement in the weekly chart. So this is a very strong support zone, 34,400 in round figures and 33,800. Any close below 33,800, we could see a little bit of lower levels coming up. Understand that, okay? But as of now, things seems okay because we have one hammer, a second hammer. This is a very small hammer, so I will not consider these two, but these two hammers are looking very strong as of now. We'll have to look further what happens later on. I have been consistently repeating now since weeks, the chart of private banks are looking very, very similar to the Bank Nifty. Nothing much difference. Once again, you can see there is a resistance. In the Bank Nifty chart, we had 78.6% retracement as the resistance. Over here, we have the 61.80% retracement. But the problem is now the trend in the weekly chart of the private banks has gone flat. It's not up anymore. All right. It's flat. You can see prices are, consistently range bound. Yes, there are supports. I'm not saying no, but you will have to be a little bit careful in picking up your trades. PSU Banks. If you remember, I had told all of you something that PSU Banks, they are trading close to a very strong resistance in the monthly time frame. This resistance has not been surpassed. Please take a note of that. This is not a resistance which you should be careless about. Take a very strong note of that. And plus, it is a monthly time frame. So generally, monthly time frames do have a very strong grip on the market. Now, if you remember, last week I had told that we do have a higher high over here in price, and we do have a lower high in the RSI, which means a negative divergence. Now, despite this negative divergence, till now, I'm not saying what will happen in future. Till now, we cannot see any big candle in last, you can say 1 month or so, or maybe 1 month plus 1 week. All the candles are pretty small enough. So it seems that it is more of a sign as of now that the momentum is losing its grip. Nothing more than that as of now. Also, if I put up this Fibonacci retracement, it is taking strong support from 23.6% Fibonacci retracement. Now, generally what happens is people, give more importance to stocks which are down. But generally, I believe the less a particular index or a stock retraces less and then it starts going higher, the more stronger it is. So we absolutely do not know what's going to happen in future, but this particular candle pattern what has happened over here. And even in the last week, I had told somewhere over here on this day, okay, I think on the Friday, I had clearly said that some sort of bullishness seems to be occurring in the PSU bank chart, but you need to be very, very careful while initiating a trade. And what has happened? Yes, there has been one slightly bigger candle, red candle on the 28th of July, but immediately the next day, we can see the candlestick has pulled back and this is a very green candle. Generally, these formations are extremely bullish, and when they occur and if they are useful, market goes up in a vertical manner. So keep a note of that. But again, be very, very careful in picking up trades because overall market is choppy, and PSU banking chart in the monthly time frame will be close to a resistance somewhere over here. So your timing has to be very proper. If you're too late, you might buy near the resistance. If you're too early, you probably would jump, before the breakout. So kindly don't do that. And yes, have a very, very strong command on your position sizing. Do not risk blindly. Please take a note of that. In this scenario, rather than changing your trading setup again and again, that's not a very wise decision. Market will come back to its normalcy. Market will come back to a way of moving which is more profitable for you, for your trading setup, but you need to wait with patience, and holding on to your position sizing is the key, rather than trying to risk more and cover all of what you have lost. Don't try to do that. Metals. Now metals, if you remember last week I had said, in fact since many weeks I'm saying the same thing, metals are in an uptrend, strong uptrend, and they are overstretched. So again, I maintain my stance. You can see RSI is almost at 80. Not interested to initiate any positional trades, all right, at this moment. For here also you can see there was a higher high and lower high. Once if this particular high in RSI is surpassed, even strong up movement can occur in the metals. So yes, you need to keep metal pack on your radar, but understand one thing: initiating swing trades rather than positional trades would be much more intelligent, because the overall sector is overstretched. Also, if you see properly, this metal pack is near to its 161.80% Fibonacci extension. So anyone who is holding metal stocks, kindly think of booking partial profits immediately. Please do not delay about that. All right. Auto pack. If we look at the monthly time frame, yes, there is some sort of trend line resistance due to which the auto pack is not able to go up, but trend is still up nevertheless. Now what has happened over here is the trend, if you see once again, the trend in the monthly time frame is up, the trend in the weekly time frame is flat, and the trend in the daily chart is down. Generally money is made very, very easily when the trend is same in all the time frames. Rather than levels, I always give more importance to state of trend. So currently the state of trend is different in all the three time frames. So be very, very careful if you are initiating any trades. But yes, last week I had told 10,100 to 9,900, this entire zone can provide a strong support to this particular sector, and you can see what has happened. We have seen this one-day pullback from 99.90. The sector went all the way till 10,175 and again came down. So there is some sort of selling pressure at higher levels, but we'll have to see how the price action occurs at this level. In case if it breaks below this level on closing basis, maybe some sort of short-term dip can occur. All right. If you see the financial sector, overall price is in an uptrend, but 1, 2, 3, 4, 5, 6. Now since almost 6 months, this particular sector is hovering around its resistance band. So you need to be very, very careful about that. Again, if you see in the weekly chart, it's looking extremely range bound. Only thing is this particular candle was little bit bullish because this is a dragonfly doji. But apart from that, nothing much from my side. Yeah, if you look at the daily chart, just like Nifty, it's getting a support from 78.6% retracement. So if the sector has to move higher, I think it will at first close above this entire gap, then again close above this recent highs, and then if it continues to move higher, possibly we'll start seeing good trades in this particular pack. IT sector, again, extremely strong uptrend, continues to be overstretched. RSI is at almost near 86, 85.55, you can see. If you're holding any old trades, just like metal, if you're holding any old positional trades, delivery-based trades from 1 to 4 months time frame or 1 to 6 months time frame, if you're holding them, you can continue to hold them, but keep trailing your stop loss. But at this level, if someone asks me that should we initiate a new positional trade in this pack, I would not be interested, to be very frank, because it is overstretched. And in the weekly chart also, nothing seems to be wrong. Only thing is, in the daily chart, if you can see, prices can sense some sort of resistance coming up near this particular level, and this is somewhere around 31,135, and today thing market top at 3834. So this can happen. You know, market has its own sense, and sometimes what happens is before even testing the resistance, market can see profit booking. So if you're holding any stocks, be careful about that. Yes, you can keep a watch on this sector in case if there is a short-term dip or anything, and if you have any swing trades coming up in your trading setup, you can surely go for that. Pharma pack. Okay, Pharma pack has surprised everyone. In the monthly time frame, absolutely nothing is wrong. I think the pharma sector is slowing down a little bit after this strong hammer and this strong bullish bell tool. You can see all the candles are very small except this one. This is also a smaller candle, but still these two are very, very small. So I think it's slowing down. And in the weekly chart, last week I had clearly said that be very, very careful in the pharma pack, and the reason was this particular triple negative divergence. This was a clear sign that the sector is slightly slowing down, and the price was also hovering near its Fibonacci extension. So you need to be very, very careful. And thanks to this particular stock, Dr. Reddy, what a big red candle it has formed in the daily chart. All right. So you need to be slightly more careful in this particular pack. But the way it is moving up, you also need to, apart from Dr. Reddy, if you can see any other stocks, only for swing trades. I repeat, only for swing trades. Do not go and jump in for positional trades. I am not interested for that. All right. Yes, you might miss a trade. It can happen. So be it. But what my sense is that I will be happy to make slightly lesser amount of money, but I would try to stick to my rules. All right. And this is not a time when entire market is range bound. This is not a time to go aggressive. All right. FMCG pack, I think it is locked in a range. This is the, the higher side of the range. This is the lower side. And we can see just a small retracement. Overall, things are fine. If you can see some sort of up move from here, and if prices surpass this particular level, I think you will start seeing new highs. Mid caps, same thing. Prices overstretched. RSI almost near 79-80 levels. Not interested in any new positional trades. Swing trades, yes, you can go for. You can go for the swing trades. Also, one thing is important. Price is near this particular extension. So be very, very careful. Until and unless this recent high is not surpassed, you will not see extreme strong up move. But these two candles, this one and this one, seems to be very encouraging. It seems some sort of strong buying is coming over here. So if this particular level is taken off very strongly and follow-up buying comes, then you will see new highs coming up in this particular sector. All right. So I hope this weekly sectoral analysis has helped you. And now I'll start taking all of your questions for the positional and the swing trading side.